Hi, I'm Cord Arlen. I'm a CPA and attorney licensed in Nevada. And today I'm going to be talking about S corporations. First, I'm going to talk about what they are. Second, I'm going to tell you about how to form them. And then third, I'm going to tell you why people choose to form their company and be taxed as an S corp. So first, what an S corporation is. An S corporation isn't really the type of organization that your company is. Meaning, your company could be a corporation or it could be an LLC. The S corporation is a status that the company applies for with the federal government to be taxed as an S corporation. So the main theme is S corporations is not an entity type, it's just a way to be taxed by the federal government. Also, states have an S corporation status too, where you can be taxed as an S corp according to state tax laws. Here in Nevada, there isn't an business tax, so the only consideration is for the federal taxes. So how do you form an S corp? An S corp is formed by first forming either a corporation or an LLC here in Nevada. You can file with the Secretary of State to form your corporation or your LLC. I believe it's important to seek professional help when forming either a corporation or an LLC. It can be done online by yourself. However, there are many pitfalls that someone without experience could fall into when forming either the corporation or an LLC. So that's the first step. The second step is applying with the federal government to be taxed as an S corp. So in the year you start your company, either your corporation or your LLC, you file with the federal government to be taxed as an S corporation. As soon as that is accepted, you will be taxed as an S corp. You will fill out an 1120-S as opposed to the 1120 you would with a corporation or a partnership or a sole proprietorship that you would fill out if you were just an LLC. So that's how you form an S corporation. Now let's talk a little bit about why you would choose an S corporation tax status if you're a company here in Nevada. Well, first of all, S corporations are pass-through taxes. What that means is the corporation itself doesn't pay income taxes. All of the income from the company flows down to your personal tax return. The S corporation files a tax return, but it's only for informational purposes. The shareholders of the S corporations, or the owners, are the ones who pay the taxes, and they pay them on their personal tax return. This is important because it avoids the double taxation of corporations. Corporations pay their own taxes first, and then any distributions from the corporation to the individual is taxed again as a dividend. An LLC is already taxed with pass-through taxation, so that's not a concern for the S corporation status when the underlying company is an LLC. The reason why an LLC would choose the S corporation status is to avoid payroll taxes. As just an LLC, the profit from the company, the individual shareholders will be paying the payroll taxes on the income. Now, payroll taxes are about 13 to 15%, and they change from year to year. They're the Social Security and the Medicare taxes that employers have to pay employees. When you own your own company, you have to pay that on yourself. Now, however, if you're an S corp, you don't have to pay self-employment taxes on the earnings. However, you must take a W-2 wage from the S corp, the owners. So there's a difference between what you can take in as wage and the income from the S corp, that you can save some payroll taxes. So those are the advantages of an S corp. You can save on payroll taxes, and you can have the status of a pass-through entity. Thanks for watching.